Hello, I'm Sean Spear, editor-at-large at The Hub. Thanks for joining our ongoing coverage of the federal election campaign. I'm grateful to be joined today by serial entrepreneur and former director of the Bank of Canada board, Phil Deck, to talk about, among other things, a conservative proposal to provide a capital gains rollover when it comes to the tax treatment of capital gains, all in the name of trying to boost investment in Canada's economy. Phil, thanks so much for joining me.
Nice to be here. Thanks, Sean.
Phil, after Mr. Poilievre made this announcement, I couldn't think of anyone better than you to discuss it, to understand, as someone who's spent years in the market, how it might work, what its implications might be, and whether or not you thought it would ultimately make a positive contribution to Canada's economy. If you'll permit me, why don't we just start with some basics? How, in your understanding, will this policy work, and how would it differ relative to the current tax treatment of capital gains?
Well, I mean, it's pretty simple. Normally, when you dispose of an asset and you have a gain, you pay the tax at the end of the whatever reporting period you're in. This would allow you to defer that tax as long as you reinvest the funds in a Canadian investment. Could be private, could be public. It's not clear how that would apply to housing, since housing isn't really taxed if it's your capital residence. But for all other Canadian investments, presumably you could roll it over.
And what problem in your mind is something like a capital gains rollover trying to solve?
I think it's easiest if you put it in a bit of a macroeconomic context. If we think of the macroeconomic model that's, divided into consumer spending, government spending, fixed investment, and net exports. That's the general economics model. Canada, for the last 10 or 15 years, has been running hard on consumer spending and government spending, and has had really low levels of capital investment, and that's affected our productivity. Now, it's not entirely clear whether that's because we don't have people wanting to invest, or they can't find investments that are good enough for them to invest in. If we think back 20 years ago, when there was a huge amount of capital spending going on in the oil sands, for instance, about 40% of all of Canada's capital spending was in the oil sands. And it really lit up the country, across the board. We had machinery and tooling from Ontario. We had labor coming from all over the country. And we had very high-paying jobs as a result of the kind of capital investment that was going on. So right now, there's very little investment going into the oil sands because there's no way of getting whatever oil you produce to market. So, is that a matter of not enough people wanting to invest, or not having the kind of investments that are available? It's not clear. But I think if you look at a policy like this, while itself it's not transformational, it's part of an approach to say that we as a country need to make more investments in productivity improving capital. We can't just run the company on government and consumer spending, because let's remember, a lot of the consumer spending that we've seen in Canada has come from the housing market, where as our housing has improved in value, people have been able to direct that into consumer spending. So we have a very imbalanced economy. And this, I think, goes along with a bunch of policies that we've seen from the Conservative Party that tries to redirect part of the economy into better capital investments to try and boost productivity. I mean, one of the most stark graphs that we constantly see in the media is the decline in per capita productivity in Canada. And it's marked where, for 30 or 40 years, we tracked the U.S. fairly closely, and suddenly we flatlined 10 years ago. So, I think this is one of the measures. Certainly some of the other things that the Conservatives have talked about involve capital investments, certainly some of the pipelines and energy projects. And given that we will almost certainly, regardless of what deal happens with the Americans over the next couple of months, there probably will be some kind of deal. It will probably challenge our manufacturing sector the most, and certainly it looks like automotive, where the Americans covet some of our jobs. And so the need to make investments to liberate some of our oil and gas and minerals becomes much more important. And that's part of this. So this would clearly make it more appealing to people to invest and continue to invest in capital assets. It tilts the scale a bit in that direction. So it makes sense in the context of some of the other investments or announcements.
Yeah, it's great analysis, Phil, that persuasively makes the case that government policy ought to be thinking about how to pull more private capital into the market to address that economic imbalance that you're talking about, and boost productivity. But why in particular a rollover? What inherent problem is something like what the Conservatives have put forward trying to solve for?
Well, it certainly improves the investment return with the deferral. So it's not massive, but if every time you sell one investment and buy another investment, you have to pay capital gains, then it's leakage from your return. And so if you're able to reinvest the proceeds without having to pay the capital tax, your return will be better, given the same kind of investments that you would have than you would have if you had to pay the tax partway through. It also, I think most economists would look at this and say, whenever investment decisions are affected by tax considerations, they tend to distort good capital allocation. So whenever you would do one thing, but because of the tax ramification, you'll do a different thing, then we have an inefficiency. And so it helps that because, look, I remember many decades ago, I worked for an insurance company in the investment department, and there was about 80% of the equity portfolio that couldn't be sold because the accumulated unrealized capital gains were so high that the company wasn't willing to sell any of them. That's a great example of misallocation, where they might have wanted to have all kinds of different investments but weren't willing to take the capital gains hit. So I think it does. It solves a whole bunch of problems at the margin. We also have, one of the problems we face in the country is a lack of housing. Partly that's because some people tend to sit on real estate for long periods of time to see how long they can, accrue that capital gain. If they were able to dispose of it without having to pay that hit, then there might be more land available for housing, for instance. So there's a bunch of places that this can make a difference. Again, it's not going to transform the whole economy by itself, but in the context of trying to move the country to favor savings and investment over consumption, which I think if you look at the overall macroeconomics of the country is warranted, it makes sense.
Yeah, the example you gave, Phil, is so compelling. In a previous life, I did some research on the harms of high capital gains taxation, and the issue of the so-called locked-in effect is commonly cited throughout the literature, and the extent to which this deferral or rollover pushes back against that instinct to lock in investments, even if that capital can be deployed more optimally, then, as you say, it should help on the margins. Let's steelman, though, for a minute, an argument you might hear from a critic of the proposal. What would you say to the argument that the incentive isn't that great because ultimately the investor will have to pay tax on the capital gain? Why do you think that, even notwithstanding that argument, this is still a worthwhile proposal?
Well, I think there's a rational and an irrational effect here. The rational effect is that, look, the math of the deferral works. Your investment returns are high if there's no leakage, through the period that you're investing. But there's also lots of investors who are, absolutely disproportionately and irrationally opposed to paying taxes, and they will do anything to avoid it, even if it's going to damage their return, right? So there's lots of people who just don't want to have to pay any tax bill, and so they'll hold assets instead. And I think this would help them say, well, you're not going to pay the tax, so continue doing business, making capital allocation decisions, disposing of things if you want to. You're not going to have to make the tax hit. So when you calculate the deferral benefit mathematically, it's pretty modest. But I think when you change the investor attitude towards the fact that, hey, I have this pool of assets, I can move around, I can make different decisions, but until I want to go spend the money on some kind of consumption, I don't have to pay. And yes, in some ways, it takes the whole tax system and it moves us closer to the idea of a consumption tax, where, which is the idea that you're not paying tax so much on what you're making, you're paying tax on what you're spending. And, yes, I think that from where we stand as a country, where we have not invested enough, that we've relied much too heavily on consumer spending, by marking up an asset that is now, by international standards, tremendously overpriced, we do need to find a way to address our productivity efforts or productivity deficit, if you like, by focusing the economy more on savings and investment.
A penultimate question. Another criticism that I've seen in recent days, Phil, is that the condition that the secondary investment has to be in Canadian assets as opposed to global ones will minimize the benefits of this proposal. What would you say to that argument?
Well, it's a distortion, right? So you're telling investors that if you invest in Canada, you're going to get a better benefit than if you invest somewhere else. Is that best for investors? Who knows? They're going to have to take into account that in their own investments. And lots of Canadians have moved their assets out of Canada because they look at the productivity growth and they look at the available investments, and they decided that they can do better elsewhere. And the performance of the S&P over the last couple of years would say that that was a correct decision. So is it going to, on balance, keep assets in Canada more? It probably will. What's probably more important than that is to actually make sure we have an environment for large capital investments and capital spending, so that in some ways attracts those investments, right? So this by itself isn't going to have a massive effect, but it's a helpful thing, and it will get people's minds focused on the fact that we need to be a capital investment country. We need to invest in productivity.
Yeah, and I would just say in parentheses, for those critics who think that the proposal ought to not be conditional on investment in Canada, I would say, fair enough. But if that's the trade-off that comes with freeing up taxes on capital, that strikes me as worthwhile. And let's wrap up with a final question that pulls up a bit, Phil. Before we started recording, we were talking about the extent to which this proposal and some of the others we've seen in recent days starts to shape up this election as a contest of ideas in a way that we didn't see in week one. On one hand, you have a diagnostic about Canada's economic woes, starting with a lack of private capital and a lack of private investment. And on the other hand, a more state-centric view about the role of the government in the market economy. Why don't you just reflect on that contest of ideas and what you think Canadians might make of it?
Well, I think it emphasizes the difference in approach between, parties on the right typically wanting to just set an environment for a private decision making that will be more effective, and whereas I think the Liberals have tended to be focused, including on today's housing policy, on really government-directed investment and government projects. This is the kind of policy that goes along with just an unleashing of private enterprise and not having government involved in the decision making. So I think it's consistent with the brands of the two parties, and I think it's I appreciated David Coletto's column in the Hub on the weekend, who who I thought was tremendously insightful in saying that, Poilievre is going to have to focus on issues that affect the rebuilding of the country, and don't just focus on the trade issues that have kind of hijacked the election. And this would be that. This is part of creating a more effective economy and higher productivity economy, but not by government directing it. I guess as the exception would be the Invest in Canada part, but I think they would think that's legitimate.
Yeah, just a ton of insight on what is a complex but important policy proposal. Phil Deck, someone with years of experience in investing in markets, and of course, as I said, having served on the Bank of Canada's board of directors. Thank you so much for joining me.
Yeah, it's been great. Thanks, Sean.